Hello, crypto aficionados, risk-averse hedgers, and the rest of you who hit play after your second coffee. I'm Sen B'Hiro, and this is the SENB Daily Brief, live this afternoon on Friday, November 14th, 2025, the day after the greatest non-data dump in market history. Yesterday, we had no CPI number, a government shutdown that dribbled into oblivion, and crypto deciding to go on a weight loss program overnight. Today, we're cleaning up the fallout. Decrypt reports Bitcoin plunged below $95,000, down more than 6% in 24 hours, and spot crypto ETFs saw nearly $870 million in outflows. That's not a mini dip. That's a did someone pull the rug while we were all applauding move. So today, we'll unpack what happens when data disappears, liquidity vanishes, and both politics and markets high-five each other into chaos. Strap in. This one's gonna be messy.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's get into the carnage, because today the markets decided subtlety is overrated. Yesterday was confusion, today is consequences. Crypto woke up, chose violence, and the charts look like someone knocked over a stack of Jenga blocks in slow motion. According to Crypto Rankins Decrypt, Bitcoin plunged below $95,000, losing over 6% in the last 24 hours. Spot Bitcoin ETFs, the so-called stabilizing force, saw $870 million in outflows. Ethereum fell back under $2,900. Solana dropped through $200. And high-risk altcoins lost anywhere from 8% to 20%, depending on how delusional their communities were this week. So what changed? CPI didn't show up. The shutdown delayed data collection. That alone dried up liquidity. But today, markets realized something bigger. If the CPI is unreliable, so is the Fed's roadmap. And when the Fed's roadmap is unreliable, every risk asset suddenly becomes a roller coaster built by interns. Barron's notes that the lack of official CPI left traders relying on half-baked private surveys showing mixed inflation signals. Some data suggests cooling. Other data sets show heating. No consensus, no anchor, just chaos. It's like asking 3 weather apps if it'll rain, and they respond sunny, rain, meteor impact imminent. What do you prepare for? Exactly. Stocks aren't having a picnic either. The Dow dropped another 0.9%, the S&P slid 1.2%, and the Nasdaq is down nearly 1.7% as traders reassess the shutdown's economic fallout. A Reuters piece says the shutdown's economic shock is now estimated to exceed $24 billion, including lost wages, delayed services, and now corrupted or incomplete federal data sets. So yes, the shutdown ended, but the hangover, the bill, and the damage control are still being delivered Amazon Prime. What's interesting is that commodity markets are behaving like nothing happened. Oil steady near $64 a barrel, gold slightly up. The flight to safety isn't fully on yet, which means risk markets are panicking faster than the macro signals. In other words, crypto is leading the fear parade, not following it. And when crypto leads fear, buckle up. All right, that's the crash breakdown. Coming up next, the data drama continues. How the Fed reacts when inflation numbers don't exist. Private sector estimates contradict each other, and policymakers are forced to improvise. Spoiler, it's going to get spicy.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Okay, buckle in, because the data fog we warned about yesterday just turned into a storm. The Fed's in the driver's seat, and they've just discovered the windshield is covered in mud. This morning, Federal Reserve official Jeffrey Schmid, Kazan City Fed, said inflation is too hot and policy is where it should be, signaling he may dissent again at the December meeting. Translation: even as the data pipeline broke down, the hawkish voices just got louder, and markets reacted the only way they know how, by panicking anyway. Reuters reports global equities tumbled today, yields rose, the dollar gained, and markets sharply scaled back chances of a rate cut next month. Let's be clear, we're not just reacting to missing data, we're reacting to the possibility the Fed can't rely on its usual playbook anymore. Without solid CPI, PPI, jobs data, how do you gauge inflation? How do you justify cuts? You don't. You hedge. You wait. You speed up when others slow down. Or in this case, you spin your wheels and hope the parking brake holds. Analysts at Plus 500 say a 0.2% monthly rise in PPI is expected this week. But again, that's expected data built on expected assumptions when real data is on holiday. This matters for crypto because when the Fed's blind, risk assets like Bitcoin and altcoins wobble. And when risk assets wobble, well, coffee sales go up. That's our business model. So what's the actionable takeaway? Expect more volatility. Expect less clarity. Expect traders to overtrade because they think they have an edge when they don't. Coming up next, we'll zoom back into crypto, futures, liquidity, altcoins, how they're reacting to all this macro confusion. Stay with me.
Treasure hunt beneath the data seeds, fortune coded in these blockchain keys.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's zoom the lens back into crypto because today's moves weren't just retail panic. This had fingerprints all over it from the big desks. When Bitcoin dumps 6% in a day with no CPI data, no obvious catalyst, and no ETF inflows, that's not chaos, that's choreography. Let's break down the players. First, institutions. ETF outflows hit nearly $870 million over 24 hours. That's not Karen from Facebook rage selling her 2-month-old Coinbase account. That's pension desks, macro hedge funds, derivative arbitrage firms, reallocating faster than you can say risk management. They're not leaving crypto. They're adjusting exposure because the macro landscape went from foggy to blindfolded. Next up, derivatives. Funding rates across BTC and ETH flipped negative. That's traders de-risking, closing longs, and preparing for wider swings. Open interest remains elevated, which means positions aren't closing. They're rotating. Now the altcoin world. Solana down double digits from last week's peak. Ethereum drifting under $2,900 like it left the stove on. Chainlink retraced nearly 12% in 48 hours. And meme coins? Let's just say the vibes are gone. Liquidity evaporated across smaller caps overnight. And when liquidity leaves, altcoins don't just dip, they teleport lower. Another interesting piece, stablecoin flows. Tether issuance slowed, USDC redemptions ticked up, and a few analysts pointed out that on-chain activity looked more like a flight to dry powder than a true exodus. Meaning, traders are sitting on the sidelines with cash, waiting to buy blood, but not ready to step in yet. This is classic pre-data uncertainty behavior. And the funniest part? We don't have the data. Which brings us to everyone's favorite question. Is the crash over? The answer is maybe. If institutions continue rotating instead of exiting, we likely see sideways action. If markets get clarity on CPI or the Fed hints towards stability, we bounce. If nothing improves, then buckle up, because this isn't a bottom, it's an appetizer. Coming up next, we're going to break down the political fallout from the shutdown, and trust me, nobody escapes the roast on this one.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, time to revisit our favorite sitcom, Congress. The shutdown ended, everyone claimed they won, and somehow the data still didn't show up. It's like rebooting your computer and the pop-up still says, system error, good luck. Let's break down the narratives today because they were flying so fast you'd think they were part of an airdrop campaign. First up, the Democrats. Politico, AP, and every blue-leaning pundit with a webcam spent the morning explaining why ending the shutdown was technically a victory, even though half the caucus is furious about losing leverage in December. They're calling it a necessary compromise, which, in political language, translates to, we lost, but please pretend we didn't. And they're already warning that shutdown round 2 is going to be a line in the sand. Congress has drawn so many lines in the sand at this point, it looks like a Zen garden made by toddlers. Now, the Republicans. Fox News and conservative blogs spent the whole day spiking the football, claiming that Democrats caved, Republicans stood firm, and fiscal responsibility lives again. Meanwhile, the bill they signed funds the government for a very short time and fixes zero of the underlying fights. It's like patching a leaking roof with a Band-Aid and calling it renovation. And a few Republicans are already bragging about round 2 in December, which is very bold considering the first round cost the economy tens of billions and broke half the data collection infrastructure. But hey, never let reality get in the way of a good victory lap. Now, let's talk about the American people. Federal workers are relieved. For now. Economists are worried. For now. Traders are confused. As always. Regular Americans? They're asking questions like, did Congress learn anything? The answer is no. In fact, today proved the opposite. Because as journalists tried to parse the details, politicians on both sides immediately pivoted to fundraising emails titled, We Saved America, Donate Now. Anyone who survived the last 43 days knows that sentence should be written in quotation marks, italics, and accompanied by a laugh track. And finally, the market's perspective. Stocks, crypto, bonds, foreign exchange, every chart today said the same thing. Cool, shutdown's over. Now please fix the data supply chain before we lose our minds. No one cares who won. No one cares whose talking points went viral. Markets only care about liquidity, stability, and reliable numbers. And right now, they have none of the above. So what's next? Congress will go home for the weekend. Staffers will prepare for December's rematch. Economists will try to reverse engineer inflation using partial data and caffeine. And somewhere in D.C., someone is definitely Googling how to collect 30 days of CPI surveys in 14 days. All right, enough politics for one day. Coming up next, it's time for the community mailbag. Your questions about today's crash, tomorrow's moves, Tina Bean's alleged HR violations, and why macro days always feel like boss fights. Let's get into it.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time once again for the community mailbag, the part of the show where I open your messages, sip my coffee, and try not to choke when I read what some of you send in. Today's theme, the crash, the chaos, the confusion, and, of course, Tina Bean. First up, Kyle from Salt Lake City asks, Sen, is Bitcoin under $95,000 a buying opportunity, or is this the warm-up act for more pain? Kyle, great question. Here's the truth. Under $95,000 might be a buying opportunity, or it might be the universe reminding you that DCA exists for a reason. We have no CPI data, no clear Fed path, record ETF outflows, and institutions rotating positions like they're solving a Rubik's Cube under pressure. If you're a long-term holder, these dips usually age well, like wine or memes. If you're trading short-term, wear a helmet. Next, Jenna from Atlanta writes, is the shutdown ending actually good for crypto, or is that just a headline? Jenna, it's complicated. The shutdown ending is good because the government is back online and data collection resumes. The shutdown ending is bad because the damage from 43 days of no data is still baked into the system. So is it good for crypto? Eventually. But markets move on expectation, not gratitude. And right now, expectations are wobbling like a unicycle on gravel. Leon in Miami asks, Sen, how do institutions trade when the macro signals are broken? Leon, I love this one. When institutional traders don't have reliable CPI, PPI, jobs numbers, or forward guidance, they rely on historical correlations, liquidity signals, futures curves, and one underrated tool, panic. But to be fair, institutional panic is different from retail panic. Retail panic sounds like, bro, should I sell now? Institutional panic sounds like, let's reduce exposure by 3.8% and widen spreads 12 basis points. Same vibe, better vocabulary. Next, Trevor from the Telegram group asked, if this crash keeps going, what's the next support for Bitcoin? Trevor, technical analysts online are currently drawing lines on charts like third graders with a pack of crayons. Some are saying $92,000 support, $89,000 liquidity pocket, $85,000 institutional bid zone. But until data stabilizes, these levels mean less than usual. The real support? Trader patience and caffeine. And finally, the question half of you asked, where is Tina Bean during all this macro chaos? Tina is busy. She said she's working on a special report titled How to Blame Everyone Except Yourself During a Market Crash. She also submitted an HR ticket claiming stress damages because the CPI didn't drop on time, so either she's filing paperwork or she's somewhere recording spicy commentary for Monday. And knowing Tina, it's probably both. All right, amazing questions today. As always, keep them coming. You can submit your own questions, market takes, or chaos commentary through Proof of Thought, powered by the SENB token. If your submission gets featured on the show, you move up the community leaderboard, which is basically our version of a fantasy league for sarcastic analysts. Next up, the wrap-up, the token plug, and what to expect this weekend.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, before we wrap up this wild Friday, let's talk about the engine behind this whole operation, the SENB token and the Proof of Thought system, which is now fully live and already collecting some very interesting submissions. If you're new here, here's the quick rundown. SENB isn't just a meme token. It powers this entire show, the mailbag, the community playlists, the voting system, and the ability for you to help shape future episodes. And with Proof of Thought, you can submit questions, pitch segment ideas, vote on topics, get featured on air, and climb the community leaderboard. It's basically the Web3 version of sending fan mail, except this time it doesn't get lost in someone's dusty inbox. If you want to get involved, head to senbhiromedia.com, grab some SENB, and jump in. The more takes you submit, the more the community grows, and the more this show becomes something built with you, not just broadcast at you. All right, final thoughts for this Friday. We've had a shutdown ending that solved nothing, a CPI report that never existed, a market crash driven by uncertainty, and analysts pretending they know what's next. The truth is, nobody knows. Not the Fed, not the politicians, not the influencers, and certainly not that guy on X who draws Fibonacci lines like he's auditioning for an art contest. What we do know is this. Markets survive uncertainty. They always have. And in chaotic weeks like this, the smartest strategy is usually the simplest one. Stay patient, stay informed, and stay caffeinated. I'm Sen B'Hiro, and this has been the SENB Daily Brief, Crash Edition, for Friday, November 14th, 2025. Thanks for listening. Thanks for being part of the community. And I'll see you Monday for the weekly opener and whatever fresh madness hits over the weekend. The SENB Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production editing and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbhiromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.